Hey everyone, Tony Smith here again with crinco.com, and today we're talking about insurance for rental properties. More specifically, we're talking about if you turn your primary residence, that's the home that you're currently living in, into a rental property, do you need to address your current insurance policy, or will the insurance policy you currently have suffice for rental property? The short answer is you need to address your current insurance policy. Here's what you need to know. A primary residence homeowner's policy for a single-family home is typically written on policy form HO3. A rental property for a single-family home is typically written on policy form DP3. The DP3 policy form has verbiage to address the unique risks associated with a rental property, whereas the HO3 policy is written and packaged in a way to protect a primary residence homeowner against loss. One of the easiest examples of this to understand has to do with personal property. If you're insuring a primary residence, chances are you have all or most of your belongings in your house. As such, the HO3 policy, which again is the policy typically written on a primary residence, will include personal property coverage in an amount generally equal to 25 to 50% of your dwelling coverage. So if you have a $250,000 house, you'd be looking at roughly $60,000 to $120,000 in personal property coverage. Now, if you're insuring a rental property, chances are that you're renting that property out unfurnished. The DP3 policy does not include personal property coverage as part of its standard coverages. Of course, you can add the personal property coverage, but it's not typically included like it is for an HO3 policy. Many times we find our customers simply just forget to inform their insurance company or their agent that the primary residence will become or has become a rental property. After all, insurance is typically included with the mortgage payment, so it's kind of out of sight, out of mind. However, we sometimes have customers concerned that they won't be able to get insurance if their home turns into a rental property, or that it'll be more expensive, when the truth is the DP3 policy is typically less expensive than an HO3 policy, and it's relatively easy to get insurance on a rental property. The reality is if you fail to inform your insurance company that your primary residence has become a rental, you run the risk of having your claims being denied or your insurance policy getting non-renewed. This is one of those situations where it's best to be proactive to ensure that you're properly covered. So there you have it, ladies and gentlemen. Rental property coverage explained in 2.5 minutes. crinco.com, insurance simplified.